With regard to price developments, euro area annual HICP inflation was 1.9% in November, according to Eurostat's flash estimate, unchanged from October. In the next few months, HICP inflation rates will hover around current levels before moderating again in the course of next year. Overall, in the period ahead, inflation rates should remain moderate. Inflation expectations over the medium to longer term continue to be firmly anchored in line with the Governing Council's aim of keeping inflation rates below, but close to 2% over the medium term. This assessment is also reflected in the December 2010 Eurosystem staff macroeconomic projections for the euro area, which foresee annual HICP inflation in a range between 1.5% and 1.7% for 10, between 1.3% and 2.3% for 11, and between 0.7% and 2.3% for 2012. Compared with the ECB staff projections published in September, the range for 2010 is unchanged, while the range for 2011 is marginally higher. Available forecasts from international organizations provide a broadly similar picture. Risks to the outlook for price developments are broadly balanced. Upside risks relate in particular to developments in energy and non-energy commodity prices. Furthermore, increases in indirect taxes and administered prices may be greater than currently expected, owing to the need for fiscal consolidation in the coming years. At the same time, risks to domestic price and cost developments are still expected to be contained. Turning to the monetary analysis, the annual growth rate of M3 remained broadly unchanged at 1% in October, after 1.1% in September 2010. The annual growth rate of loans to the private sector increased to 1.4% in October from 1.2% in the previous month. Broad money and loan growth hence remained low, supporting the assessment that the underlying pace of monetary expansion is moderate and that inflationary pressures over the medium term are contained. The steepness of the yield curve has continued to lessen somewhat, implying a gradual softening of the dampening impact on M3 that was associated with shifts of funds from monetary assets to longer-term financial assets outside M3. The interest rate constellation also includes a further widening in the spread between interest rates paid on short-term time deposits and those paid on overnight deposits. As a result, annual M1 growth has continued to moderate, standing at 4.9% in October 2010 after 6.2% in September, while the annual growth rate of other short-term deposits continue to be less negative. The annual growth rate of bank loans to the private sector continues to conceal positive growth in loans to households, with 2.9% in October after 2.8% in September, and still negative growth in loans to non-financial corporations, which stood at minus 0.6% in October, unchanged from September. When correcting for the impact of the derecognition of loans from bank balance sheets, the growth in loans to non-financial corporations continued to strengthen, further confirming our previous sentiment that a turning point was reached earlier in 2010. Over the past few months, banks have generally stabilized the size of their balance sheets while expanding the provision of credit to the private sector. However, the challenge remains to expand the availability of such credit when demand picks up further. To address this challenge, where necessary, it is essential for banks to retain earnings, to turn to the market to strengthen further their capital bases, or to take full advantage of government support measures when needed for recapitalization. To sum up, the current key ECB interest rates remain appropriate. We decided to leave them unchanged, taking into account all the new information and analysis which have become available since our last meeting of 4th November 10. We continue to expect price development to remain moderate over the policy-relevant medium-term horizon. Recent economic data are consistent with the positive underlying momentum of the recovery, whilst uncertainty is elevated. A cross-check of the outcome of our economic analysis with that of the monetary analysis confirms that inflationary pressures over the medium term remain contained. We expect price stability to be maintained over the medium term, supporting the purchasing power of euro area households. Inflation expectations are firmly anchored in line with our aim of keeping inflation rates below but close to 2% over the medium term. The firm anchoring of inflation expectations is of the essence. Turning to fiscal policies, while budgetary developments for some euro area countries are more favorable than expected, concerns about unsustainable fiscal positions and their vulnerability to adverse market reactions remain very high for others and have had repercussions throughout the euro area. In this environment, there is a clear need for the responsible authorities to strengthen confidence in sound public finances, thereby reducing risk premia in interest rates and supporting sustainable growth over the medium term. At the same time, all euro area countries should pursue ambitious and credible multi-year consolidation strategies and implement fully the planned corrective measures, focusing on the expenditure side. In their 2011 budgets, countries need to specify the necessary fiscal adjustment measures in detail while standing ready to correct any slippages from the fiscal objectives announced. Substantial and far-reaching structural reforms should be rapidly implemented to enhance the prospects for higher sustainable growth. Major reforms are particularly necessary in those countries that have experienced a loss of competitiveness in the past or that are suffering from high fiscal and external deficits. The removal of labor market rigidities would further support the adjustment process of these economies. Increasing product market competition, particularly in the service sectors, would also facilitate the restructuring of the economy and encourage innovation and the adoption of new technologies. Such measures are crucial for enhancing productivity growth, one of the main drivers of long-term growth. All these structural reforms should be supported by an appropriate restructuring of the banking sector, sound balance sheets, effective risk management, and transparent, robust business models remain key to strengthening banks' resilience to shocks and to ensuring adequate access to finance, thereby laying the foundations for sustainable growth and financial stability. Finally, let me recall that the Governing Council welcomes the Economic and Financial Adjustment Programme, which was agreed by the Irish government following the successful conclusion of the negotiations with the European Commission in liaison with the ECB and the International Monetary Fund. The programme contains the necessary elements to bring about a sustainable stabilization of the Irish economy. It addresses in a decisive manner the economic and financial causes underlying current market concerns and will thereby contribute to restoring confidence and safeguarding financial stability. The Governing Council welcomes the commitment of the Irish public authorities to take any further measures that may become appropriate to achieve the objectives of the programme.